Fibonacci. So in this section, we're going to be utilizing some tools, one of them being Fibonacci, and we're going to be implementing these tool sets into the existing framework that we have learned in the past modules, which is focusing on market structure, using our time frame analysis, looking at our demand zone where our buyers are at support, our supply zone where our sellers are at resistance, identifying the swing points. Again, we're going to be going over the setting up a trade with our entry and exit, and as we mentioned before, stop loss, and we're going to get into that going forward. But for the purposes of this section, we're going to learn about Fibonacci and how we can start to understand and use this tool alongside the existing concepts we just mentioned. So we're going to get into a bit of history here, very short. I'm not going to pretend like I'm an expert or a historian, and I'm going to explain to you what the significance of Fibonacci is and how it's transformed into a pretty useful tool when looking at technical analysis. So, Fibonacci, famous Italian mathematician, Leonardo Pisano Bigolo. Please, my Italian accent is not perfect. Commonly known as Leonardo Fibonacci. And this individual was famous for creating the Fibonacci sequence. And it's this list of numbers right here. And so the idea behind this is, by definition, the first two Fibonacci numbers are 0 and 1. We can see them right here. And each subsequent number is the sum of the previous two. So what do we mean by that? Well, 1 plus 2 is 3. 3 plus 5 is 8. 8 plus 13 is 21, and so on. Now, it's the relationship amongst these numbers that is special and unique. Any number divided by the subsequent number equals a number close to 0.618 as you continue further into the sequence. So outside of 0 and 1, and if we were to start with 1 and 2, 1 divided by 2 is going to give us 0.5, and that would be 50%. Now, if we look at 2 divided by 3 and 3 divided by 5 and 5 divided by 8, as you start to do this, you can pull up a calculator and do this on your own, it's going to start to equal close to this number. Now, if we're going to be using any number divided by the next two numbers, so in this case, let's just say we did 3 divided by 8, or we did 8 divided by 21, your answer is going to be close to this 0.382. And if we move out to 3 numbers, so 3 divided by 13, 13 divided by 55, etc. If we were going to go out into the sequence, it's going to be close to this 0.236. And now the significance of this 0.618 is that this is a very common occurrence within our universe, right? And that's going to revert back to this Fibonacci spiral. You guys can go into, in-depth analysis of this on your own, and it's really interesting, and I do encourage you to do this, but there's a phenomenon or belief that this Fibonacci sequence plays a large role into, our lives. And you can see this Fibonacci spiral in this shape throughout our universe, whether it be a snail shell, or this actually can look like some of the space galaxy formations that they study, or even petals on a flower. All this is reverting back to it, and the 1.618 or golden ratio is something that is often referred to and compared next to by Fibonacci. But for the purpose of this, let's focus on these numbers. So we have our 0.618, our 0.382, and our 0.236. And it's derived from the relationship of these numbers, and these are going to be key as we move forward into understanding how this is going to help us with our trading tools. And believe it or not, it is. I know that was a long overview, but history is important to me, and understanding the context of the tool that you're using is something that I believe everyone should do. So moving on, we're going to be referring to these as Fibonacci retracements. I'll refer to these as fibs. It's just easier to say. It's commonly used as you start to see this more in trading language and whatnot. The key takeaway here is that a Fibonacci retracement is used alongside our existing framework of support and resistance, right? A key component to technical analysis, which is, as we know, supply and demand, where buyers and sellers are. So as we start to layer on tools, and Zorn's going to get into things like Ichimoku Cloud later on, and we're going to be obviously doing Fibonacci right here. This is something that we're going to use as confluence, and confluence is almost an extra data point that's giving us more confidence and believing that this setup could play out because we have a list of things that are convincing us. So Fibonacci levels are one way that we can start to develop a trading strategy, right? As we talked about, you want to kind of think about what kind of trader you want to be, and then you want to think about your system. And this is going to all play into your approach, the tools that you choose, and ultimately help us with entries, exits, placing stop losses. Again, we're going to get into that in more advanced sections. But for now, think of this as a tool set and a way for us to reinforce our thesis with another point of confluence. So here's a slide that's going to just tell us what the Fibonacci tool looks like, how we get it, and how we set it up. So here's our trading view, right? We have a screenshot right here. Here's my menu bar on the side. I would drop into this right here, which is this, and I see that this is a list of tools, and we're going to be looking at the boom Fibonacci retracement. Okay, so that's how you get the tool. It's set up with a 1 up here, a 0 here, and as you notice right here, what do we have? Well, we have a 0.5, a 0.618, a 0.382, 0.236. These are some higher fib numbers we'll get into later on in the more advanced Fibonacci sections with kind of, a more in-depth analysis of how I use them and set up my trades, and maybe some tips and tricks that will help you and give us that edge that we're looking for. But let's focus on these numbers right here. Now, the two numbers that I really want to focus on with Fibonacci are the 50%, or the 0.5, and the 0.618, or the 61.8%. Now, we describe these as decimals, but I'm going to be referring to them as percentages. So if I were to open up my tool and double click it, I have my Fibonacci retracement. As you see, it says Fib retracement, style coordinates visibility. For style, this is how you set it up. And again, we're going to go over this in live examples, but this is an overview intro here. I want to get you guys familiar with the layout and how we look at this stuff. I check these off, and these are the numbers that are showing on my Fibonacci, as I can see here. For the purposes of this lesson, I colored them. So I have a red here, and my blue here, and purple here. Now we're going to be focusing on the red. So in the examples, you're going to see this exact setup as I start to show you how to map out a trade setup using Fibonacci tools. Now, before we go into the examples, let's learn how we're going to implement this tool. So as we learned, our swing points are key areas that we want to focus on. Well, here's why, outside of what we learned before. I measure from a swing high to the swing low. By defining these levels and using this system is going to help me with being a disciplined trader and also developing a success rate on the trades I take based on this particular tool and the parameters I'm using around that. Like every chart we look at, we're going to want to identify our key SR levels, and I think you're going to find it really interesting as you see that these Fibonacci's are going to line up pretty nicely with these support and resistance zones. As I just mentioned, we're going to be doing Fibonacci levels and focusing on the 50% and 61.8% retracement levels. And higher fibs can provide the best RR. As we know, Zorn has gone over the risk-reward ratio. So looking at a higher fib level, maybe you're really trying to catch a wick and we'll get into that as the sections get more complex and we get into more advanced trading setups. But let's get right into it. So here's a chart. This is our setup. We're looking at a high time frame chart. This is a daily view, and let's start to break it down. Again, we're going to be reinforcing every single concept that we learned from the prior sections, and we're now layering on these tools. So just like any chart, I'm going to approach it and identify what is the market structure and what is price doing. Well, I'm identifying a swing high here. I see a range-bound consolidation market. Clearly our buyers are down here in a demand zone at support, and we have a range high being established, and sellers are in our supply zone at resistance. We can see that we have a breakout here, creating our SR. As we know, this would be SR flip on a breakout. We've now taken out this swing high. We've made a higher high and a higher low off of this consolidation and this low. We have bullish market structure. We're getting to an inflection point. We can see that we have a swing high up here, and now we have started a downtrend. And we're making lower, we have a low here, we're making lower lows, lower highs. Now we've identified an area where if price were to come back into it on a high time frame basis, in this case a daily chart, we want to pay attention to it. So let's see, we have price coming back down into somewhat of a support zone here with our long lower wicks. Price trying to hold, it breaks back above it, comes back down. Right here we have an SR breakdown and another breakdown. And we could see that price has eventually come back to where? Well, our key daily SR flip, taking out a key swing high. So there we've looked at our market structure. We can see what price is doing. And now let's start to hone in on those swing points I was talking about. Well, I've identified this as a key swing point right here. Now, I could have taken this one. I could have taken this one if I was looking at a retracement for this area. But I'm focusing on this, and I'm focusing on this swing low, because this swing low is very important to me because of this key daily SR level. And this swing high is a critical point because this was the highest point before price really broke down and came into that. So again, when I'm using a Fibonacci tool, I'm going to be measuring from a swing high to a swing low. As we can see, the 0 is here, the 1 is up here. And here are my Fibonacci numbers. And let's just take a look at this quickly. We have an SR breakdown right here. Pretty interesting that the 61.8 Fibonacci retracement level is about there. And look at this. The 38.2, or the 50%, is right around an SR breakdown. So how do we use this going forward with the trade? Well, let's get right into it. After looking at the chart, market structure, what is price doing, identifying our swing points, mapping out our Fibonacci, as we can see here, our swing high, our swing low. Then you start to dive into things like candlestick structure and is support holding or is resistance holding. In this case, we're looking at a key daily SR flip, and we have our swing low identified. We have price coming back up, and we have coming back down to test our swing low. And as we know, our buyers are here at support. So high probability trade setup is we want to be buyers at support. We have identified an area as a swing low to position our stop loss around. Again, we're defining our risk. And now we can look at an exit strategy for this long position around not only an SR breakdown level around here, also a Fibonacci. So this is our point of confluence. Before we were just looking at simple SR support and resistance zones where price broke down or broke out of. And believe me, those are extremely important, but this is giving us that extra point of confluence, and it's helping us with building a trading strategy. So we want to be focusing on the 50% and the 61.8% Fibonacci for now. If we were to get into a long position, define our risk under this swing low, and we're buyers at a key daily SR on a high time frame, and we want to look to trade and catch a move back to a SR breakdown. Now, mind you, you could exit here at the 50%, but let's say you were looking at the 61.8% and this key spot right here. Okay, well, yes, this is hindsight, and that's how we learn, but I use this in real time. Zorn uses this in real time, and it's a respected tool by traders if used correctly. And that's a very important thing, is be disciplined with this. So let's see. That would have been a really nice long entry, and we're exiting at a 61.8 at an SR breakdown. And before, we could have just said, yeah, we're going to be exiting at an SR breakdown, right? This is resistance. Well, 61.8 resistance, and boom. Very nice trade setup. So, again, as you're starting to learn this stuff and you're thinking about it and putting it all together, here's a very nice tool that's going to give you more confidence and points of confluence around your trading strategies. Let's go to another example. Here, let's take this chart right here. It's another longer term daily macro view. Let's break it down. Swing high, breakout, retest, SR flip. Key zone. Price is making higher lows and higher highs. Here, 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 here. Coming back down into our SR flip. Pretty big wick down here, but mainly holding this level. We're developing a range. We have a range high here, our sellers supply resistance. Our range low, we can see that the buyers are stepping in right here in a demand zone at support. Consolidation, or breaking out here above the range high, and we have identified our swing high. We are breaking out above our swing high up here, and then we're starting to make higher highs and higher lows. Key SR flip, we can see that price comes up into a supply zone, resistance here, the sellers are pushing price back down. We have identified a swing high right here. Price comes back down, breaks through our range high, which was our SR flip, comes back up to retest and breaks down. Where it comes into is our key range-bound consolidation zone and a very crucial SR flip that we have identified back here. So here's my swing high, and here's my swing low. I'm going to take my Fibonacci tool, like we did in the last example, and I'm going to measure out the 1 to the 0. Now, for this instance, let's look at a short setup, because we are exhibiting bearish market structure here. And we want to be trading with the trend. So looking at a retest of this SR breakdown, and now we can also see that this is a 61.8 Fibonacci. Let's see how this could set up. Again, we have the same chart. We've identified the same areas of importance. Here is our swing low. We can see the buyers are present. This candle is just showing us that buyers are stepping in and that there is a potential reversal coming. Now, our first area of resistance is our supply zone on our SR breakdown, which is our 61.8 Fibonacci level. So price is coming into it. Again, if we're looking at this, and we will get into this going later on as we go into the more detailed trade setups, I'm going to be dropping my time frame. I'm going to be looking at a low time frame, and I'm going to say, what are these candles doing? Are there high wicks to the upside? Are the sellers present? Are the buyers running out of steam? And that's going to really help me hone in my entry. But for the purposes of just explaining it right here, we're going to be using the high time frame and these levels right now. So we know that this is an area of resistance. So let's say we wanted to enter our short here. We can put our stop loss above the swing high above here, and again, we're going to get into more detailed ways to place your stop losses, but here's the short setup we want, and we want to play it back down into our swing low support zone. because we don't know. This could end up in a range. Here it broke down, but we don't know that that's going to happen. So the safest play is right back down to support. And we can see that the Fibonacci really helped us in determining a key SR breakdown with this point of confluence. So these Fibonacci tools, you're going to become more familiar with them. They're going to be very helpful, and it's going to get you on the path to developing the tools and the system that you want to implement as a trader. So let's do a quick recap. As we learned, Fibonacci retracements act as a tool and a guide for trade setups. We just saw this in the past two examples. We want to be focusing on the 50% and 61.8% Fibonacci's. As we also learned, they tend to match up nicely with support and resistance levels. Again, key is SR first, and then we're implementing the tool. And lastly, consistency and discipline are extremely important when using these tools. That's because the more disciplined you are and consistent you are, the better track record you're going to have, and that track record is going to be based on a truthful approach, right? I'm using the swing high, I'm using the swing low, and that's it. And I want to see what my track record is and success rate. So as I go into my journal and I put, okay, this is a 70% success rate when I am shorting a first test of a resistance zone on a 61.8 Fibonacci, or I'm longing at a similar instance, right? Like really start to think about these things, and it's going to really click as we start to move forward. So I hope that was a really useful guide to Fibonacci and intro, bit of history behind it, and you can see what the tool looks like and how we've used it kind of in some examples. And we're going to get into some live examples later on in the course. But for now, digest that. And now Zoran is going to go over some of his trading tools around Ichimoku clouds.